Fred Passelli here. What I want to talk about today is why do real estate investors tend to pay less in taxes than W-2 employees and some business owners? So I'm going to break it down into three main reasons. The first reason is the type of income real estate is normally considered. Normally, real estate is going to be considered a passive income, and passive income is taxed a bit more favorable than active income. Passive income tends to be taxed at 15 or 20%, and it's also not going to be taxed with FICA taxes. So that's your Social Security and Medicare tax. So it's going to avoid FICA completely, just federal income tax. Number two is depreciation. Depreciation is a non-cash deduction that real estate investors and anyone that owns any type of assets take advantage of. Basically, depreciation is a cost allocation of the asset over its useful life, basically as you use up the asset. So real estate is very unique as it is actually a appreciating asset, so it tends to go up over long periods of time, but you get to depreciate it as a tax benefit. So you're getting a tax benefit year over year, depreciating the asset, bringing down your rental income or your net rental income from the property, and then the asset value is also going up. Now, the third reason I want to talk about is different real estate strategies. We're not going to go too deep into these right now, but some of them will be known as cost segregation studies. This is basically a study or strategy to accelerate your depreciation and write off a lot more earlier on. So basically you take the property, you divide it into different useful life assets. So 3, 5, 7 years, 15 years. So you accelerate a lot more than the normal 27 and a half years for rental properties, or 39 if it's a commercial property. And the other one is opportunity zones and other more complex real estate strategies. There's basically just a lot of tax benefits, tax deferrals, the 1031 like-kind exchange. So different strategies that you can really take advantage of your appreciating asset and use it to not pay taxes. Another big one is people take out lines of credits and equity refinance if they need cash. Remember, debt is all considered non-taxable. So that's another powerful strategy that people use to get money out of a property and pay no taxes on it. So those are all different reasons. Those are one of the main reasons investing in real estate seems so advantageous, especially if you can find a good deal that cash flows and you have good tenants in place. So three main reasons there. Pretty good. I would consider always looking into real estate, but first make sure you have a good property and the numbers make sense.